Hello again, traders. Right, I'm currently waiting for my coffee to cool down, so I thought I would see if there was a trade out there and make a video of it. Well, I didn't intend to make a video, but it seems a good opportunity. So we're just after the Frankfurt Open, 7:08 UK time. I'm actually also waiting to go into the supermarket to get some breakfast, but I thought again I would have a coffee first. So what you're looking at here, this was really interesting. All of this was buy zone, bright green, and the rest of it was all a crock of crap. Excuse my French. Notice the RSI, and this is important. The RSI is not looking particularly good. It's okay for gold, but the rest, all of the rest was pretty useless as well. S100, US 100 rather, is also looking pretty good. So look at the US 100 chart. Well, I can do it there actually. And yeah, we're quite bullish with that. Now, the reason I'm making this video, I'm out of this gold trade by the way, 99%, but always leave a bit on to see whether it goes where I expect it to. The reason I'm making this video is that, firstly, to explain the importance of the Bollingers to me, and the speed at which you can find trades using this, and point out the difference between when I started my 3CR journey, as it were, candlesticks instead of swing trends, swings, in other words, because these two green candles is a swing, low high high low high high, pullback, continuation. So and all I need, that on the lower time frame, not explaining this very well, that on the lower time for new traders, that on the lower time frame will be a bunch of candles on M1. So that one 5-minute candle will represent a swing of 5 candles, probably a couple of candles to pull back, and then another 3 or 4 candles, well, 1 candle pull back, 4 more M1 candles in this upswing, and then another 1 or 2 candle pullback and 2 or 3 more candles. Obviously we're talking about 5 candles max, so that's how I'm visualizing that. Now in the old days I would start at the weekly, look for the direction. Let's pretend this is the weekly and we have a weekly 3CR, and then I would drop down to the daily and see where we were in regards to the pullback and continuation 3CR, and then the H4 on the next candle up, see where that's pulled back. So they're all in alignment. You get what I'm saying here now. Now, the reason I chose to know that, understand what's going on, but I can now just open this chart. Let's take the open, high, low, close, because that's exactly what I do. So I'll run through the exact process. Okay, one click, they're gone. Thank you, Dean, for that fabulous script. So the exact process is I will open my charts, wherever I happen to want to trade from, a beach, a mountain, or an aeroplane, or whatever. Well, no internet on the aeroplane, but you know what I mean, on a train. So I will have a look at this. This is currently set to 30-minute, 15-minute, 5-minute. I do want a coder. I'm going to contact a coder and get this so I can have perhaps more time frames on there, or multiple instances. I've tried to put multiple instances of this indicator, renaming it, -1, -2, and then the higher time frames there and the lower time frames below. That doesn't work at the moment, but I've not put a huge amount of work into it at the moment. And I would like the time frames listed there so we can clearly see what's going on. We've got the source code for this, so that's important. I digress. So first thing I do, open my charts, see whether this is looking good, or if it's starting to look good, because we do have the different colors, as you know, if you've already had a watched a few of my old videos. So this one was all three buys. So the point I made about the 3CR uh, um, analysis is I can virtually forget about that. I mean, I love 3CRs because they are an important chart, a candlestick pattern, a really, really important exhaustion pattern. But because I understand that, then all I have to do is look at this, think that's great, then look over here because this was my go-to indicator. Check all these as well. I mean, I do it in second nature now. So I looked for a potential next spot for this gold to go, and it is up at the pivots. As I say, I've got my, my ultimate template here now. And don't ask me to give it to you, just make it up yourself. It's better for you to do that because it educates yourself. There are no shortcuts in trading. The ones that are still here after 20 years or whatever are the ones that have done the graft. So the next thing I put on my charts then, because I do not want to be getting stuck with some monthly or weekly level above me. So the next thing I do, so here's the process again, guys. I've checked this. This looks good. Then I look at this. I want to see the highest possible numbers. So if there's a few to choose from, like I trade my yen pairs, I want to see high numbers. Gold is 80. That's not good. DAX 64. I want to see, and I would like the cumulative. This is going to change as well when I get a chance. I want a fourth column there telling me that what's the strongest of all the pairs. I know Onesie did an incredible job. I think it was Onesie or it was Dean. I forget now. Apologies, guys. Of creating a box that gives us the high to low. This might be back to front now because the low is the highest numbers are the bottom ones. But anyway, I digress. So then I look at these and want to see the strongest numbers. So gold is the strongest number. The red numbers I want to see in the 15s and stuff there. The big numbers I want to see in the 80s possibly, but it's not. And then I also have another way of looking at these, the higher time frames. The higher the number on the higher time frame, say this was 80 and this was only 70, and that was 60 and this was 75, then I want to be looking at the highest M30, M15. So there is quite a lot of discretionary nuances here. So I've checked this. I've checked these are looking good. This is the higher time frame, remember. So we're on M5. This is the equivalent of M15, M30, something in between because I want really it's M30. And then I slap Dean's levels on there. And now I've got a roadmap for what's ahead of me. So there's the pivot I've said that might ultimately get tested, but I've got a great big monthly level in front of me from the 1st to the 10th, 1st of October, and I've got these look like H4s. Yeah, dotted lines are H4s. That's an old daily low, daily support level. Oh no, it's not, it's an open. We're currently testing that, and lo and behold, Dean's lines told us why the price is stopping at these points. So there you have it, guys. I didn't intend to make this video, but I thought it was important to share my thought processes, and most importantly, how this, if I change the time frame, I lose all those levels, which is a good thing to do because they are, I know my charts are messy, but they're ultra messy. So that's it, guys. We've broken through this. This was good also because we've broken through the daily open, today's open. The TMT, I'm almost blind to that, but that tells us where the open was there. Tells us where the price, the low of the day went down to, which bounced off that weekly low there from the 25th of my eyes, 5th of the 11th. Oh, it's got a couple of levels there. Sorry, the weekly low is from the 27th to the 10th. There's a few levels hanging around there, so when we hover over it, that's why it was a little bit iffy. So there you go, guys. This was the only buy signal currently when I entered that trade. And look what's happened. But then you expect it to go mad at this point because we are in the big boys' playtime now. The Frankfurt Open, London is due in 42 minutes. And remember today is American Election Day, so that will affect price more than likely. But the banks just use it to crush. The big banks I'm talking about use it to crush their competitors. It's total manipulation, guys. But I can trade it using the methods I've explained. So that's it. I did mean to mention also 3CRs and all the different ways of I've taught myself to view price were fantastic. And these are only one step up from using moving averages, squiggly lines, whatever squiggly line makes you happy. Bollingers are just squiggly lines. But, I've sort of reinvented the wheel, but it had to be done. It had to be done to give you the confidence to hit these trades when these three greens, the in-depth work involved and the in-depth analysis involved will give you the confidence to hit those trades when you want to. There was another little sub point I thought of whilst hitting the supermarket was that I've forgotten what I was going to say now, but you have to have absolute confidence in what you do, and the only way to gain that confidence is to devise your own methods. I've got so much now in my head that I tick for every trade. Oh, I know what I was going to say. I mean, you probably look at my trades, you probably look at my Twitter feed, you probably watch a few of my videos, and you probably think, oh, what a load of BS. How can you keep getting all these trades? And we've all heard it. You only show the winners and all that malarkey. Well, earlier on Twitter, I posted a UJ chart, and I said something like, I'm watching this or whatever. And the reason I didn't take it was because it wasn't perfect at that time, and I wanted to go and rest my eyes a bit. I'd been on the charts for an hour or two due to insomnia or whatever, just waking up, and so there wasn't a trade there. It wasn't a perfect setup when I posted that chart. It was an hourly chart, that's right, and it was the hourly close at 5 a.m. UK, and I felt it was going to go up. In fact, I can look at a chart. I think the level might be there still. Yeah, there it is. That was the line I drew on dollar yen, and the price was around, that was the high of that candle there, if memory serves me correct, just before the close. Might have been that one actually. I seem to remember it being 55 minutes. Whatever. Actually, it will tell us, it should do. 655, yeah, the high of 655. So it's there. And it was not perfect at that point. But I posted this before I got a bit more of a resting shut eye. And because of all these indicators and the multi-time frame, after an hourly close, which was this next candle, or it might have been that candle close. No, it was this next candle. It was 5 to the hour. Everything was looking good for a potential long. But I wouldn't take that long at that point because I wanted to trade with a positive signal. All this had to look right. All this had to look right. All this had to look right. And it wasn't. That's right. It was on the H1. There it is there. So I'm looking at this on H1. That previous H1 high of that one was broken, and that is a perfect signal to go long. Now, when the current H1 closed, I would be looking for that to potentially go long as well. And as it happens, from my point when I highlighted this particular trade, and this is important, this point as well, because it proves, or it should prove to you, that I don't take every trading opportunity unless it is absolutely 100% perfect. And that is an important lesson for all of us precision scalpers. There are so many trades there, and there will be so many perfect trades once you've trained yourself to wait for them, that there is no need to take risky trades. I had a chat with a friend online yesterday. He's sort of getting the scalping mentality now. You just can't make this stuff up. This is a 2B. This is a 2B on the M1 chart. That's why I draw these trend lines. And that idiot at ICT says trend lines don't work. There's a 2B down here. There. That's the low. That's the break through the low here, and that was along on the M1 chart here. And this will be a 3CR on M1 as well. So, and there's a hammer candle. You've got everything you need. I don't trade UJ because the moves are so appallingly small. 5 or 6 pips. I'd rather go for 15 or 16 on GJ. Anyway, I've rambled on long enough and made my point about the indicators. It doesn't matter now. I've said this 100 times on here. It doesn't matter. I've always tried to find the Holy Grail indicator, which is why I've tested dozens and dozens, into their hundreds, no doubt, and discarded them because they weren't perfect. Now I can go back and add them all back and find value in virtually anything I've looked at. And remember, I don't look at all the crap, all the rubbish indicators. I had a filter, and that was the 2B reversal and the 3CR from 17, 18 years ago. When I came across the 3CR, not when I started looking at charts. That was even longer ago. So once you've got a benchmark, and I've said this about the 3CR, once you've got a benchmark like the 2B or the 3CR to test every indicator against, that's how I came. This is as near the Holy Grail of indicators as you get, the RSI histo. And then the TMA, you can, I have forgiven the TMA for numerous little intricacies that don't agree with this and the 3CR, because you can forgive it because you've got a basis to compare it to and allow it. People moaned and groaned when I put the MACD on the chart. Oh, the MACD, yeah, blah. That, if it wins more than it loses, then in my opinion, it's a good indicator. That's all you need to know. And they won't all agree, but if they do all agree sometimes, I mean, they won't all agree every time. This. They won't agree all the time. But if you get your timing right, and a lot of them agree, and you've done your 60,000 hours chart study, you cannot fail to make money, and you trained your brain not to trade on adrenaline. That's it. Sorry for the preach, guys. I hope some of you watch this stuff, and I hope some of you actually get value from it, because it is meant from the right place. I just don't want you to lose money trading, like thousands and thousands, possibly millions before you, and definitely dozens and hundreds that I personally have seen fall by the wayside. Have a great, whatever it is, election day, Tuesday the 5th of November, people. Thank you for watching.